The Forex market will definitely have a lot to process this week with 4 central bank meetings. Thanks for joining us at xm.com. This is The Week Ahead. I'm Cristina Marujos. With me today to unpack this very busy week is our senior market analyst, Haralambos Pisuros. Haralambos, every once in a while, we get one of those really busy weeks with a lot of central bank meetings. Exactly this is what lies ahead. So let's start with the United States, of course, and the Federal Reserve meeting. It's happening on Wednesday. It's widely expected to stand pat. However, investors will be eyeing the updated dot plot. So how do you think the dollar will respond?
Hello, Christina. Yes, the Fed is expected to stand pat next week, but this doesn't mean that it will not be an interesting meeting, especially with all these uncertainty. Earlier this week, we had a positive conclusion of in the U.S.-China trade talks, but then Trump said that he would send out letters to other nations outlining terms that they could accept or reject, while just overnight, Israel attacked Iran's nuclear facilities. And amidst all this uncertainty in terms of US data, just after the relatively decent NFP report and ahead of the latest CPI numbers, investors were currently in around 42 basis points worth of rate cuts by the Fed this year, which was one of the very few times investors turned slightly more hawkish than the Fed itself. However, after decreasing uncertainty again, and after the inflation data showed that the CPI's consumer prices came in lower than expected, traders went back to factor in 55 basis points worth of rate cuts. Now, it seems that they are scratching their heads to figure out how the Fed will proceed from here onwards. So, with fears of a recession abating, policymakers have lately signaled that they are in no rush to further lower interest rates, as the heightened uncertainty due to trade and tariff-related developments could still impact employment and prices. Yes, as I said, inflation numbers came in lower than expected, but the core rate remained well above the Fed's objective of 2%. So this corroborates the notion that policymakers could stay patient, but it is unclear whether they will continue to signal 2 rate cuts by the end of the year or switch to just one. According to Fed Fund futures, there is a strong 95% chance for a September action and then a follow-up rate cut in December. So if the dot plot points to only 1 quarter point rate this year, the dollar is likely to shoot higher. Now, the US currency could strengthen even if officials continue to point to 2 rate cuts this year, and that's as long as they sound hawkish enough to convince market participants to push back the timing of when they expect the first one. This last scenario is the most likely outcome, in my opinion. In other words, I expect the Fed to continue signaling 2 rate cuts by the end of the year, but to sound a bit hawkish and continue signaling that they remain patient.
I see. But before the Fed, the Bank of Japan will meet on Tuesday, and this meeting will gather quite a lot of attention as although inflation remains sticky, arguing for another rate hike, recent global and trade developments, of course, have made policymakers quite uncertain about the outlook. So where does this leave the yen in all this?
Yes, we have another tricky situation here. On the one hand, the stickiness in inflation is allowing investors to price in a more than 50% chance of another rate hike by year-end. But lately, Governor Ueda repeated that the uncertainty remains very high. What's more, a former policymaker said just yesterday that US President Trump's tariffs may have ended Bank of Japan's rate hike cycle, while a Reuters poll showed that a slim majority of economists believe that the next move will happen in 2026. So, although the bank is more likely to stand pat at this decision, I believe that policymakers are likely to keep the door to further hikes open due to elevated inflation. But should they place extra emphasis on proceeding cautiously and with no rush, investors could indeed push the timing of the next rate hike into the first quarter of 2026. Something like that could weigh on the Japanese yen.
Now let's cross into Europe. The Swiss National Bank is expected to deliver a rate cut on Thursday, but the question is, will it be a 25 or 50 basis points cut?
Now, after the latest Swiss inflation data revealed that consumer prices fell by 0.1% year over year, investors assigned a 20% chance of a 50 basis points rate cut, which means that if this is the case, Switzerland could become the first advanced economy to return to a negative interest rates regime. So, in contrast to the other banks, the S&B's rate decision itself could directly impact the market and the Swiss franc. In case officials choose to take interest rates into negative territory, the franc is likely to tumble, as the decision would likely disappoint those expecting a smaller 25 basis point reduction. And actually, those are the majority. 80% of the market expects the smaller 25 basis point reduction. Now, in the case we do get the 25 basis points rate cut, the franc could gain somewhat because those expecting the bigger cut will be disappointed. But I believe that any gains on the smaller rate cut will not be massive. We will have smaller gains. On the other hand, if we do get negative interest rates, I expect a bigger decline, let's say.
I see. And finally, let's look in the United Kingdom. The pound has found some support lately, mainly on the back of a weaker US dollar. So how might it move on Thursday when the Bank of England meets, when another rate cut is likely to be delivered?
Now, following the weak labor market report, Thursday's data revealed that the UK economy contracted 0.3% month over month in April. It was the worst monthly drop since October 2023, and despite the Bank of England sounding cautious about interest rate cuts when it last met, it raised bets that another 52 basis points worth of reductions may be needed before the turn of the year. Now, according to the UK overnight index swaps, the next reduction is not fully priced in for this meeting, but for September. And the potential slowdown in Wednesday's CPI data could intensify speculation for a dovish message on Thursday, even if the Bank of England decides to stand pat. So, if we get no action accompanied by a dovish message, I believe that the pound could drift lower.
Haralambos, thanks so much. It's definitely going to be a very busy week for the Forex market, and FX markets will have a lot to digest. This was The Week Ahead at xn.com.